way. I knew he was going to kill it.
Oh! My man! What's going on, guys?
See you, baby. Good to see you, man.
How's it going? How's it
You brought
going?
the crew with you.
How you doing? How you doing?
Uncle G.
Not really good to see you again. You're on my stage if you want. Yeah. Okay.
How are you?
Yeah, good to see you.
Came with the right time to do underwriting.
Oh yeah?
Yeah, right now. That's
How you
next.
doing? How you doing? Good.
Thank you very much. I really appreciate you coming.
Yeah, you got it. You got it. How's everybody doing?
Better now.
Good to see you guys learning about real estate on a Tuesday.
And you brought the A-team with you. That's
Yeah,
awesome.
that's my guys. So Jared Glant, president of Cardone Training Technologies. Ryan Secco, vice president of Cardone Capital. And I just came over because I love this guy.
I appreciate it.
And I love real estate. Anybody that's learning about real estate, I remember I grew up, I bought my first deal in Bel Air, Texas. Just about, I don't know, maybe 3 miles from here, 4 miles. And 1117 Sheffield, man. I remember the address of my first real estate deal right now. I was terrified, had no clue what I was doing. I didn't know what a title was. I don't think I knew what a mortgage was. And I put $3 grand down and thought I'm like, I'm on my way, bro. I'm gonna be Donald Trump. You know, seriously, I thought I was like, shit, man, I was making $200 a month with $3 grand down. It made sense to me. I put $3 grand down, had $70,000 worth of real estate. And I was like, I'm gonna kill this. And then she moved out. And I was like, damn, I got to make the note. So look, I just wanted to come by if I can answer a few questions or help or be of a
I want to just say,
service
I want
in
to
any
thank
way.
Grant because it just was spontaneous. It was not planned. I didn't tell my buddies here this was going to happen. Yesterday, Grant said he needed some help with something. I gave him an idea and he said, you know, I asked him, hey, I'm going to do a mastermind tomorrow. You are talking with me. He's real estate. You guys know that, right? Yeah. So I said, yeah, how many people? I'm like, 20. He's like, all right. So thank you. Thank you for coming. I really appreciate it. It means a lot to me.
You're welcome.
I got a question.
Yes, sir.
Because I know you're buying Class A, and we're breaking into that market too.
Yeah.
How much are you?
Sit down, guys. You guys sit down, please. And,
want a chair?
Are you videoing this?
Yeah.
So look. What you want to do is just if they want to replay the video for you, that way you could pay attention to this and to whatever you might
want
get
a
out
chair?
of it. Oh no, I'm good.
How much do you think, like in Class A, you had your thumb on understanding like the crypto and blockchain market, how that's going to affect Class A real estate, and how does that impact what you're buying or putting?
Yeah,
in
so
contract?
yeah, it's a good question. So like, we're actually looking at some stuff with. I mean, we're not deep down the road, long down the road on it, but NFTs, how we could actually turn properties into something that people could convert. I'm not there yet, and we keep looking at it, but and I don't know that the market's there yet. Maybe it is, but you can't do any of this stuff if you don't own the assets.
Right.
Everything starts with the assets. Whoever owns the assets, it's like Monopoly, man. This is not going to change. It doesn't matter what new currency comes along, new world order. Let's go, Brandon. I guarantee I'm going to get 75,000 people chanting that shit tonight. So it doesn't matter what currency you trade with. The name of the game is to own the real estate. And that's not going to change. Whoever owns, for 2,000 years, whoever owns a property makes the rules. And so we about, not to answer your question, but go a little further back on it, is that we started buying Class A stuff, when, Ryan? 4 years ago? 3 years ago? You know, I was buying, everybody was running into value add. Everybody, like all of a sudden, man, there was 10 guys there. Now there was freaking 80 guys. Like, I'm not going to go play that game. I wrote a book called If You're Not First, You're Last. And basically the concept of the book is not to win the race. It's to be where people aren't or to do what they can't do. So we moved from, when the cap rates started dropping on the value add stuff, guys were buying, they still are, by the way. You're buying 3.5 caps. You don't include the fact that you're going to spend 10 grand a unit. That drives it down to like a 3 cap. But nobody says that. But when you do the math, you're at a 3 cap. And so we just moved over. We just slid over and started buying trophy shit. Like, I mean, like, I don't know.
We've seen it.
Yeah, we've seen it. The Heights deal, your deal.
We've seen it, bro.
Yeah, I mean, but it's going to get better than that. The Heights, what I just bought, that was $189 million. What did I put down on that? 60?
What deal? Heights.
The Heights. Stay with me, man.
75 million.
75 million.
How much hard did you go? Do you mind me asking? How much hard did y'all go, if you don't mind me asking?
We were at the Post Oak. I was trying to buy this deal. I call it Cyrus. Cyrus is the guy that controls the asset. He's with Alliance. The debt on the deal, Alliance is the builder. The debt on the deal was, and they're like, hey, we want to sell the deal. And so they had bids going out. They had guys lined up. We were 2 weeks from the pick. I called Cyrus and said, look, I'm going to fly to Houston. Let's work the deal out. No, I can't do that, man. You got to wait it out. I got to wait it out because it was too close now, right? So if you have questions about what I'm saying, just ask, because I don't want you to not understand what I'm saying. So I said, hey, Cyrus, just meet with me, man. I'm trying to close the distance between him and the decision maker in order to get him to pick me. Because if you don't own it, you can't make money on it. Like, the most money you guys have lost is the deals you didn't get. That's where you lose all the money. You know, you're trying to get this off and that off and a better deal here and a better deal there. That's what's costing you all the money. You're penny wise and just $10 million stupid. And so Cyrus says, I won't meet with you. I called him back again. Dude, if I fly into Houston, come on, man. Let's just meet, bruh. Come on, man. I used to use this when I was single. Come on. Let's just take a shower. You know? And you never know what's going to happen next, right? So he says no. He says no again. He says no again. I try to get the brokers. Just have him meet me. No, no, no. And then I told Ryan, we were 3 days from the pick. And I called Ryan. I said, get the plane ready. We're going to fly to Houston. He's like, Cyrus is going to meet us? I said, no, he's not going to meet us. But this isn't working. So get to Houston. We get flying to Houston. I said, Cyrus, I'll be at the Post Oak tonight. Let's do dinner or breakfast tomorrow morning. He's like, I'll do breakfast tomorrow morning. It took 7 times to get him to say yes. And me being here. He walked into the Post Oak. True story. Nothing exaggerated here. He walked into the Post Oak. I thought another guy was Cyrus. I didn't even have the right target.
He asked me, he says, which one's Cyrus? I said, the one right in front of you.
Yeah.
He's like, oh shit.
And Cyrus walks in and says, pull your LOI out, let's mark it up and get the deal done. And I said, hey man, get me the title, get me the survey. I don't even know some of these terms. Survey, and I'll give you $1 million. Hard. And we literally went hard before we had the financing.
But your reality is nothing compared to the deal. I mean, that's all relationship there. Do you mind spending a second? How are you beating the big guys?
Well, who's speed? Like so we just bought a deal. Our competition was
GID.
Which stands for what?
Big insurance company. I'll get the exact.
Yeah, he don't know. I don't know. We're just like GID. But they don't know what 10X is, so we even.
Yeah, screw them.
So GID basically is one of the biggest insurance companies in the world. They fund behind the scenes.
General Insurance Distribution.
Yeah, they fund, but there'll be another name, by the way. That's just probably a company that the Rothschilds own. Because there's 1 million companies, and then there's this family. So if you go back to back to when America was made, some of these guys had their monopolies ripped off. They had a monopoly. They had it. They broke it up. Just because they broke it up doesn't mean they died. Now they don't have one company. They have 1,000 companies, and you don't know the name of any of them, and they'll never be broken up again. So that's why they go underground to protect themselves. Anyway, the real estate does that for you. Okay, so GID was bidding on the deal. GID is Teachers Credit Union, California. CalPERS. It's all the money in the universe. The pension funds in California are behind by $1 trillion, just to understand how big this is. So that's who I'm competing with, GID. What can GID not do?
Make a decision right there.
They cannot buy their prospectus for their shareholders. They cannot write a check hard the day of the contract. They have to do their due diligence before they go hard. I don't have to do that. It's my money. It's not my investor's money. I risk my money. We see the deal all the way through, and then we go to the marketplace. So once you beat those guys, now it's like, once we got that one deal, this is how you crack the code. You get a big deal that other groups want. Don't get a big deal nobody else wants. Because then you're just the guy. You're the idiot at the poker table.
Say that one more time. Don't get it.
Don't get a big deal nobody else wants. You got to get a big deal other people want it. You got to win a big deal.
Even if you overpay.
Yeah, well, I don't even know what that means.
Yeah.
I don't know what it means to overpay.
Right. Makes sense.
Because once I own it, and this is the other thing that I think people underestimate is, if you're putting 10-year debt on a deal, which we did the Heights, right? Is that 10-year or 3-year?
3.
It's a 3-1-1. A lot of our deals we've done 10 years on. Once you do a deal with 10 years of debt, that deal cannot be sold for 10 years. So there's a tremendous amount of assets that were bought in the last 2 or 3 years that people put 10-year debt on because it was so cheap to get interest only. It's all gone. That cannot be sold again. I know you see it over there, and you see another one over there, and you see another one over there. But in between those, as you see 3 more, those are family owned. They're in Houston, by the way. You got product owned here in Houston. It looks like a lot of product. You got families here that will never sell those assets. They're not coming off the market. Nobody's ever going to give them up. So you see them as, oh my God, we're overbuilt, but you're looking at everything as equal. Then you got a whole bunch of stock here that's 10-year debt. That's not going away. You cannot defease some of these loans. But our loan on the Heights is what, $130 million? To defease that loan today would cost me, we've only been in it 2 months, it'd be $15 million to defease the loan. So we bought it. That's we'll probably get 4% cash flow on the Heights the first year. I'm fine with that.
Yeah.
Some of you would never do that. You're like, 4%? That's stupid. It's 4% more than you're getting out of the Heights. And I paid $70,000 a door below what you can replace it for. So like you need to look for the 12s, the 10s, the 8s, and the 4s. Don't get all stuck on a percentage. Because I never made money on a percentage. Like you can brag about your 23% return, but if it only made you 200 grand, I'd rather make a 6% return and pick up 30 million. So you just got to don't get locked into one game. Yes, sir.
I see what you're saying, but I have 400 to 450 units. I still need money to even get on my balance sheet, to even get into this world you're speaking of. But
Yeah.
It's just not realistic for me to set up and say, I don't need 4%. It is 4% more than I make, but on my $1 million, so I guess what?
Yeah. Well, so you're in the trap, right? So you're in the trap of okay, you got 450 units. What's your cash flow? Personal cash flow, not your investors. If there are investors, is it all you?
No, I do have investors.
Okay, so what's your piece of the 450 units?
20% ownership.
Okay, but what's your cash flow? Because cash flow is how you take care of your kids.
Yes. I think so I'm kicking out 10% to investors.
No, your personal check, check size. What do you make a month?
What do I make
off those pieces of real estate?
With my management fees and everything, we make about $9,000.
$10,000 a month.
Yeah.
Okay, so you got 120. So hey, can you live on the 10? Now I'm going to start making plays in assets, because this is not. I don't want money. The game is not to get more of this. The game is to get none of this and just the assets.
Yeah.
Right? I don't want to go work for this. I don't even want to work for the fees. So what I want to work for is the asset. I'd rather have the equity in the asset than the fees. Now I got to live. You can live on 10 grand a month. If you can't live on 10 grand a month, you got other problems. Right? So I can probably live. I can tell the way you dress. You can definitely live on 10 grand a month. Okay? He's cheap. Okay? He buys everything on sale, right or wrong.
I don't really buy clothes.
Exactly. So I got it right on the first one. He's cheap. Okay, he's like, I don't need this shit, right? So you got that piece handled. So that's the piece you got handled. Now I need to go buy some good assets, so that when we're doing a $230 million deal, my fees on that deal will be $2.3 million the day I close it. And I don't need to feel bad about those fees, because anybody is going to do those fees. In fact, Blackstone's going to be 1.5, but they don't have fees on that deal because they couldn't buy it. Blackstone's going to end up buying my entire portfolio. It just depends on what play you're going for, right? So on that deal's $230 million. We're going to put
That's 177. We'll put 70 down.
it's 177.
That's 177.
Yeah. So we put $60 million down on that deal. I got to get the $60 million. Do I have it?
No.
So if I don't have it, I'm like, okay, what do my investors want? So if I have it, what am I willing to be paid on $60 million? Do I want we're going to make 6% on this deal in Miami. I'm going to be paid $3.6 million on $60 million. I think that's a good deal. to own $250 million. And then once I get it, nobody else has got it. The moment I get that damn thing, the beast, okay? The moment I get it, I'll promise you somebody else wants it. Then we're going to go down the street and buy that one too. So we're willing to, particularly with the destruction of money going right now. The destruction of money, you guys, if money's being destroyed at this rate, you should be willing to pay more for your assets.
Did we not say that earlier today?
You're not keeping up with the destruction of assets because you're stuck in this. I grew up in Lake Charles, Louisiana. Buy low, sell high. That is costing you guys everything. It's bullshit. It's a bullshit game. Buy it with garbage. This is garbage. This was worth something when your parents were around. Whoever educated you about money, they were saving it. They had their little cookie jar. Mama had coupons. Everything was about saving. This isn't a savings game anymore. This is an investing game. If you try to save it, you're saving garbage. So you're like, I'm going to save our leftovers. Go look in your freezer tonight when you leave here. Go look in your freezer or refrigerator, and you'll see that you have been negatively impacted as an investor based on what's in your refrigerator. You got shit from a week ago in there. Ice cream that's got freaking, you got a layer of freezer burn on top of the ice cream because you guys won't get rid of shit. Right or wrong? It's because that's the way we were raised. You got a Coke can, it's got this much Coke can, it's so flat. And y'all like, don't throw that shit away. Because you were brought up in an age where saving was a phenomenon. Right? There was compound interest. There's no compound interest today. Compound interest does not exist. You cannot compound 0.0012 and never get any place. So how do you compound today? Oh man, leverage. I take $60 million or $6 million or 600 grand and I buy this asset. So if I can take this whatever this is and buy 4 times that, whatever that is, if it's real, then all of a sudden it's like, okay, that's a good trade. I don't need to know anything else. What if the location was sick and people actually lived there? And I got to write it off. And it paid me cash flow. Then I'm like, oh, that's a good deal. But you guys overanalyze the deals. In my judgment, you overanalyze and underwrite every little thing. I always go back, what's my number one question?
Do you like the deal?
Do I want this deal? Period. Okay, the Heights pays 4%. I love the deal. I find this other deal. Okay, I'm overpaying for that deal. The deal we just bought in Miami, I overpaid to get it. And so will the next guy. And if you want to buy a Park Place in Broadway, you'll overpay. You want the little Oriental Avenue? Nobody wants it. You can own it. You'll never trade it. Because nobody going around the board wants it. Hey, you want to trade more Oriental? No, bro. I don't want your Oriental. I want all your money. I was playing Monopoly with my kid 2 days ago, and she's like, she comes running to me. She's like, Papa, the nanny wants Boardwalk. I said, okay, so you own Park Place. No, my daughter owned Boardwalk. I said, so the nanny, I'm in another room. I don't even know what's going on. I said, so the nanny owns the other blue one, dark blue, okay? She's like, yes, she does. I said, good. How much money she's got? I don't know, about $3,000. Okay, good. You go back to her. You tell her you want the $3,000, all of it, to sell her Park Place. And you want 25% of all future rent when other people land on it. She went to the nanny, said, I want you $3,000, all future rent. Every time I land on it, I get 25, and every time anybody else. And the nanny took it, and she bankrupt. So you got to know the property. The point of that story is the property, man, is more important than anything else. First the deal, then the debt, then the cash. And you can find somebody to invest with. You got 450 units, man. People believe you now. You can go to people and say, I got 450 units. They can't figure out how to buy a house. Dentists, chiropractors, these guys all have money. And they're sick of their own game. They're sick of spending 12 hours fixing teeth and having to get the health system to pay them. And then have to file reports. And then the whole time they know there's medical malpractice waiting to just freaking chop them in half. So that's who I would go to. I'd go to people that are working their ass off, they got a business, and they don't have time to shop real estate on the weekend and make them partners.
What's the next market you're doubling down on? I see you coming to Houston. You like Houston a lot.
Yeah,
You keep buying here.
we'll keep coming to Houston. You know, I'm sitting on the front row tonight to watch the Astros, hoping some of these brokers, you know, say, hey, I like that guy, because it's still a game about people. So Arizona, Utah, Vegas. I like Vegas, but we never buy there because I'm scared of the management. Dallas, Austin, you know, I'm gonna tell you guys all the places, you know, the Carolinas, anything in the Carolinas, anything where people from New York and Chicago are running down. You know, Florida is going to be a haven. It's going to turn into Switzerland.
Still big on Miami?
Oh yeah, Miami's just because if you live in New York, you're not moving to Orlando. Anybody ever been to Orlando?
Yeah.
Anybody ever been to Miami?
Yep.
So if you live in Los Angeles, California, or New York City, there ain't no way you're moving to Tampa, Jacksonville, or Miami, Orlando. Miami, Fort Lauderdale, or Palm Beach, New York people can move there. They can't move to these other places. It's too small. So you got to think about the transition of that individual. So if I'm leaving San Diego, I could go to Austin, right? If I live in San Diego, I might go to Naples, Florida. I probably won't go from San Diego to Miami. It's too rocking.
Hey, Grant, I got you a question. So you're convinced that the migration is here to stay? They're not going to go back to New York. They're not going to go back to California. They're going to go to these choice areas, correct?
Well, the migration is going to continue just because New York City will not correct itself for probably at least 2 administrations. So the next group of people, liberal people, will support the next liberal people, and they're going to go in there and keep supporting programs that are failing. They're going to keep trying to tax the rich, and as they tax the rich, they're going to come where the rich aren't taxed. And the crazy thing about these hedge funds that are coming into Miami now, these people spend money, man. It's not like they're, you know, just when I didn't have anything, I thought that rich people just hoarded. I thought, okay, you give them a tax break and they're just going to save the money. That's not what they do. They just start unloading. They start buying all kinds of shit they don't need. Yeah, I'll take another plane. You know, I'll take another plane.
2 helicopters.
I'll take 2 helicopters, man, because they're write-offs. They're trying to play the game, right? I'll have another house. You know, they're trying to get rid of stuff. They don't want money. So they start giving money to charities. They start, they start taking risks they wouldn't take. They start hiring people. All of a sudden, people don't cost anything. They're like, take the payroll to, what's our payroll right now?
Probably 1.6 million a month.
A month. That's not in the real estate. That's in the other company. So I'm like, I wish it was 16 million a month, because that's people giving me time so I can come watch a game. And I'm not using people. We're trying to, I want my guys to do well. I want everybody on my team to do well. So like Jared doesn't work in the real estate. Ryan works in the real estate. Jared has more money invested in the real estate than Ryan does, because he's been with me long. So he gets a big paycheck. He dumps all his dough into our real estate deals because he's sitting right next to me. When we go online and say, hey, I want to raise some money, boom, Jared's like, I got $1 million, I got 500, I got 250. How many deals you in now? 12. And no way he doesn't get rich. He's coming in the same way everybody does. So the other thing I'll just say about bringing investors in, how many of you get money from other people? Okay, don't worry about it. Everybody's going to tell you it's a problem. Your family's going to tell you it's a problem. Your niece is going to tell you a problem. Everybody that doesn't know anything is going to tell you it's a problem. And they're going to be like, oh my God, that's a problem. You're going to take money. Dude, it's not a problem. If it was a problem, how do you explain Blackstone, Goldman Sachs, JP Morgan, Wells Fargo, Bank of America, and all these thieves?
Grant, so many of our investors are like yours. You started out at around 6-7%, on your initial returns, and now we're down, to 3 or 4, right? How do you retell that story on why they should continue to invest? Because we're all facing that too. We want to go after the nice assets, but we're getting pressure on. Well, you're a victim of your own success from the past, right?
Mm-hmm.
How are you getting past that?
So, I don't know, Ryan hears a lot of this from our investors. I'll just go through the scenario. I used to buy stuff that was getting me 10 and 12% a year. And nobody said to me, where's the 10 and 12? It'll be there. But I got to buy it as a 6 for it to become a 10 or a 12. Number 2, where's your 10 or 12? Where's your 8? Where's your 6? Where's your fucking 4? Huh? Where's your 1% return? Show me a 1% return. Apple Computer pays an 1/8 of a point in dividends. I think General Motors killed their dividend during the COVID. Where's the dividend at? What's Amazon pay? 0.5 point? The biggest companies in the world are paying dividends, man. Why are you complaining to me? Your bank, Wells Fargo, your friends over at Bank of America. Is this a bank? This place, the building we're in?
Yeah.
What do they pay? They pay 1/8 of a point? So when they're complaining to you, you need to go back ferociously at them like you're confused. One, you don't have a real asset. Number two, I have a real asset. That depreciates, that cash flows, and it pays me 50 times what your bank pays, even at 4%. And I got a sick asset. So that's how we tell the story. When COVID happened, let me just, because I know what you guys are having to do is you're having to back out of a preferred that you used to offer, and now you don't have it, or it was 8, and now it's 6 or whatever, right? When COVID hit, first thing I did, I was doing Undercover Billionaire in Pueblo, flew home, had a meeting with my staff, thought the world was coming to an end. I told Ryan, I said, remove the preferred. We were doing a 6 preferred. And then it was 80-20. And he's like, man, I said, remove the preferred. The world's going to hell. We're going to keep buying real estate, okay? The treasury bond is going to collapse to 0. That's when oil hit -40. I said, remove the preferred, bro. Why would we keep a preferred return on when the whole world just became completely a mystery? Why should I have all this security? So what we did, we reduced our preferred, went to 0. We still raised money.
Probably more. You still have it at 0?
Construction. I have a construction company. I've never been on the ownership side. I don't own any multifamily. Did fairly well this year. If you had $500,000, how would you get into multifamily?
I'd put it in one of my deals.
All right.
Number one, okay, because our second best thing is I would get 10 guys in a room, all stack up 500. I would not do a deal by yourself, I'm telling you right now.
No.
Okay,
I want to
so-
learn from somebody that knows.
Yeah, I would. The best way to invest in real estate is to invest with somebody else. Invest with them. Put some money in. That makes you an investor right away. See, what happens is
Or
people,
diversify, because he's going to buy all Class A. So get a nice diversification.
yeah, I don't really believe in diversification too much. Like 456 units on Main and Main is diversification. I'm diversified. Or I shouldn't be buying that damn property. That's the other thing. If you guys don't believe in a property, don't buy it. I'm not adding it because it looks good. I'm adding it because I believe in it, right? I want that position. So I don't, Mark Cuban said diversification is for dummies. Multifamily real estate has diversification built in already. As long as you're going doors, the number of doors diversifies you. Don't compromise that location. So you and I looked at a deal south of town. I'm like, man, did they award it?
I don't think they ordered it yet.
Yeah.
We stopped.
They stretched. I'm like, I just don't love this deal. I didn't love the location. Like, if I got to talk myself into the deal,
Apparently.
You can't get rid of these deals tomorrow morning. This
That's what
isn't
you
like,
said, right? That when you show up, you know.
dude, I know when I drive up on a deal, I'm like, I want this deal. I want my money in this deal, okay? I don't care how bad it gets. I will sleep good knowing I'm in that deal. So I would get 10 guys, each that have 500. 10 times 5 is 5 million. 5 million buys a $20 million deal. 20 million in this town right now should buy 200 doors.
What would you do if you had information on stuff that was just way on your league?
Give it to me. But there's a good chance I've heard about it. And do me a favor. Give me a deal. Give me a deal. Do me a favor. How big's the deal?
400 and some odd units.
How much money?
Probably $212 a door.
Yeah. Give us that deal. We'll buy the deal. We'll buy the deal together. We'll keep you on the deal.
I sent it to you on Instagram.
Okay. Let's do it. I'm paying attention to it now.
But let me tell you about Houston, Texas. You guys, Houston.
Houston's down.
Okay. Houston is a dangerous town to invest in. This is a dangerous town to make money in. Don't compromise location here. Even more so than other places, this town can be crazy because they're going to always build.
Okay, I want to add something to that.
Yeah.
Because I said this earlier, and this is my belief, and I've said it the last couple of times, and I would love for you to qualify it. Dallas has done well.
Yeah.
But they've been financial.
Yeah.
And they just like this. And I wanted to buy there for so many years, and I just keep waiting. I'm gonna hit the falling knife, and it doesn't happen. Houston has had this, and I got it because we're energy dependent. In this current administration, until they can prove to me integrity election or the integrity of the election, it's going to continue. Energy is already twice what it was on Trump's last day.
Right.
This is an energy town. I think you just said it. Everything's going to go up in value. Energy is going to continue to go up. Wouldn't that stabilize Houston and
1,000%.
give us our chance at that double-digit rent growth every year that Dallas has experienced the last 10 years?
You got a lot of product here. The thing you have here is, you know, there's what, 6 million people here, 7 million?
Yeah.
This is the largest multifamily in the world. So,
But you like the heights because you got to tear down to build.
you can't build in the heights. My people across the street are $1.1 million. I'm at what did we pay a door? $285. People are like, you overpaying. I'm like, dude, look at across the street, dumbass. Yeah, but I could have bought this thing. Yeah, but you didn't. You didn't. Yeah, but the guy across the street, he only paid $250 a door. Okay, that's sold, bro. Like, you can't make money on yesterday.
And you're playing for 10 years.
I'm playing. I'm waiting for 2031. What happens if oil hits $70 and stabilizes in this town?
Here we go.
All of a sudden, you got people that were millionaires that are worth $400 million. When a guy goes from being a couple $1 million to worth $400 million, everything changes at the bar. He don't even drink. Thinking everybody. Let's go, man. Let's go. I need some new boots. I need a new big belt. He's already got a damn closet full of them. We're going to rehab the kitchen again. It's only a year old. Like, it's so much. Dude, when you end up with $400 million paydays, it's like it's stupid time. And then it's like, and then it goes to 80, okay? 400 becomes 800 million. And then it goes up to $90 a barrel. And he's like, oh, I'm a billionaire now. All of a sudden, shit changes big time. Right? Okay, whole life's going to come apart. Now he's looking at all kind of crazy stuff to do. Money just flooding in this town. What's that going to do? Jobs. Jobs do what? Jobs bring in people. People rent.
Somewhere to live. Right?
They're not going to buy here. You can't buy a house here. So what's the average house here? 400?
Realtor, where's my realtor?
300 right now.
300? Good. So you go put a house in Sugar Land on the market for 300, and I guarantee you, end user will not get the house. An investor's going to get the house. It's worth 300. Somebody's going to offer 301, 302, 303, 304. That whole row right there wants to move in. They got their kids. It's a good place to live. It's Sugar Land. It's safe, right? Everybody's going to bid on it, and this guy's going to walk in and say, I'll pay 330. Fuck it. An end user's not going to, thank you. An end user won't even get the house. An investor's going to get the house. That has changed in the last 24 months. That did not exist in the last cycle. You will not have owners in America, folks. You will have all investors that own the real estate and rent to people. The game's changing.
So,
you got 75 million millennials that are going to be renters forever. You got baby boomers that don't give a shit if they ever own a home again, ever in their lifetime. They're like, I got it. I don't need to own a home.
Didn't Starwood just spend like $4.8 billion?
That was Blackstone actually did $4 billion worth of rental property. They all want to play in that game right now because the return on those homes is better than the return on an apartment. Blackstone raises $1 billion a month.
Yeah. So
money's got to go someplace.
Back to what we said before. Buy. Just follow the guys that are doing what you want to do. Buy. He's buying everything that makes sense that's in the corner of Maine and Maine because he's going to, in 10 years, you can't tell me it's not worth more. And with oil and everything else is going on, everything's going up.
And Houston right now is soft, okay? What's happened right now, we just learned this from our last deal, doing the Heights deal. The debt market had purchased a lot of stuff here between January and June. By the time we came to the market, we almost didn't get the debt we wanted because they were full. The lenders get full. They're like, I'm full in Houston. You see, they have these corporate
targets,
benchmarks, targets. Thank you, Jared. And they're like, hey, tap out in Houston. Let's move. Let's go get some more money in Dallas. Okay, tap out in Dallas. Let's go to Florida. Everybody's hot on Florida right now, so they'll all rush over there. They'll overplay the market, and then they'll be like, tap out for a second. Wait till next year. Houston is a soft market right now. Great for a buyer. Fewer people coming to the table. You can make better deals right now. I know 3 deals right now. We're just sitting on the sidelines waiting for these guys to like, okay, hey, come on.
I'm sorry, you have a question?
I was just gonna thank you. I met you about 4 years ago. I asked you about some debt equity. I had about $500,000 debt equity. You told me sell it, refinance it, get the money.
Yeah.
Did that. I think I had 37 units back then. So now by the end of this year, I'll have about 6,000 units, and
Dude,
that was
that's
mainly
awesome.
because of that
Wow,
money.
it's amazing.
Yeah.
Your target should be 4,500 units. So quit looking at the mechanics. You got 450, your next target should be 4,500 units. And quit worrying about mechanics. How would I go there? What would I have to do? Who do I need to meet? What investors do I need to get hooked up with? Okay, what is it I don't know that I need to know to get to 4,500 units? Rather than I'm going to add another 40 units. You're going to get old.
I want to ask one final question before I ask Grant to meet my team, because they're dying to meet you. And then
Team? What's up, team?
I want to thank him because, again, it's all about the little nuggets you pick up at every conference, everywhere. There's one or two things that will change your life. There's one or two things that will change your thought processes. You got to pay to play. You got to pay for me. He's not cheap. You're going to get nuggets. I met him back in 2018. I took my boys. That's how I first started. I continue to be a Cardone customer in there. I've invested in some deals, because I want to get to that level. Right? So you got to do the things to get to that level. You got to get that access. You got to pay for someone to, the expression you like to use, draft behind. It's important who you draft behind. Figure it out. So do those kind of things. Don't be afraid. The money's there. Use it for good. I told you, the last 3 years I haven't seen an increase in my pay because I wanted all of them. I needed them. I needed them to get to the next level for us. So last question.
How much money have you spent with me?
I don't know. A couple, 3, 4. I don't know.
I came because he's a customer. Like I hear people all the time saying, "Hey man, I want to do business with you, Grant. Grant, can we do this together?" The first thing I do is like, "Is he a customer?"
Wait, say that again, because that is like the best advice.
It's the easiest hack in the world. Like I did him a favor because he's a customer, not because I like him. Because when I put on something, he supports me.
I already bought it. What? I already
So number
bought
one,
7 tickets.
number one, the way he got on my radar was he did business with me. You want to do business with people? Do business with them.
That's it.
Tillman Fertitta. Tillman's got this event going on. I'm like, Tillman, I'll do it. How much you want, man? Nothing. I don't want anything. I don't want your money, man. Come on. Really, man? You do it for nothing? For sure, bruh. Come on, man. I don't want, what do I want, this? Or do I want a Tillman favor? I don't want this. I can get this anywhere. So you guys got to quit worrying about this. This is what I was saying about how you were brought up. Quit worrying about paper, man. It's garbage. It's made up. It says, in God we trust. And God ain't got nothing to do with this. Okay? You ain't ever met Ben Franklin. Okay? It's bullshit. The whole thing's bullshit. The building on the back's bullshit. The trees. None of this is real. It's made up, man. That building, this building we're in, this is real. So the location's not great. Right? So it was great at one time.
It's a starter, man. Come on. It's my first home.
No. I remember when this location was great. Okay? But you know what I'm saying? Like things change. Houston has these 10-year cycles. I'm sorry, I'm beating up your location.
You wouldn't tell me.
It's great if I'm staying at the Post Oak.
Yeah.
So like do business with people, man. Give people money. Give people money. We're doing a deal right now with 2 brokers. We were going to finance the deal with Goldman Sachs. The whole deal is going to be, the debt's going to be $560 million. We pulled the debt away from Goldman, and we're going to give it to somebody else. And the guy that was originally on the deal is going to get left out. I'm like, hey man, I want to make you whole, bro. Well, I'm not on the deal. Okay, well we're going to give you $200,000 not to be on the deal. We're going to give you $450 to finish the deal. Even though you didn't do the deal. This is the mortgage broker. Or I'll give you $960,000, your full amount, and you don't do anything. Those are your 3 choices. We give you $200, just bow out. We give you $450, finish the deals up. Isn't that how we stated it?
That's right, yeah.
Or don't do anything. You just feel like you're owed something. I'll give you the full amount, whatever you would have earned had you done the deal with Goldman, which was almost $1 million. I said, let me just tell you on number 3, if you pick number 3, you will never get a fucking penny from me ever again in your lifetime. I'll never do another deal with it. You pick. You want $1 million? I'll give you $1 million today. Because I don't want you feeling bad about me, bro. So when he leaves the table, he's fed. and he can't say anything bad about me. I did the other thing. I tried the other way, man. You start jabbing people here, taking this from it. It's a short game, man, and then the word gets around. You know, like Donald Trump's got a little bit of that on him. Like, you know, the people that have done business with Trump, they're like, man, he's just so difficult, man. It's always this and that and this and that and that and this, you know. So when I hear that about a guy, I'm like, I don't want that reputation. I'd rather pay the money. And then they say good things about me, and we just don't do business with them. So do business with people, man. What you're doing, keep showing up at stuff like this, and then find out how many other events you can go to, and never worry about how much. What would you charge me for this?
$2,500.
Stupid. You should figure out what you could go to next with him. Figure out what other deal you can go. Your goal, your bucket list should be: I spend millions of dollars on education. I spend tens of millions on mortgage fees. I spend millions of dollars in due diligence. That should be the bucket list, not how little you could spend, how much you could actually spend. I have 5,000 vacant units. See, that's a good thing to have on your bucket list. You guys never put that on your goals. You just put the good stuff. If I get the bad stuff, I get the good stuff. You understand? Like my mama told me when I was going to real estate, you don't want to do that, son. You don't want to do that. Why not, Mom? People are going to be calling you at midnight. I'm like, I hope so. I hope a lot of people are calling me at midnight, because that means they're customers. So just shift your thinking a little bit. This is a good dude right here. I came here because he's a good dude. He was a customer first, and then I started to like him.
Thank you very much for showing up.
Hey guys, thank you very much. All right. See you guys at the game tonight. Okay. Let's go, Brandon.
Let's go, man.
Can I get a quick picture of both of you?
Oh, the mom's right.
Yeah.
I think he's going to introduce to all y'all in there.
Thank you.
Thanks for coming. I really appreciate it.
Come on, guys. Thank you guys.
Sorry, man. You want to take a quick look?
You guys go.
County, this is our train, this is NOLA. NOLA's our head of our, NOLA, are you familiar with ordinance? You're not, right?
No.
This is NOLA Gordon. Training, do we have asset management?
This looks awesome.
Does this look familiar to you?
Man, that's fantastic.
Thank you. This is Caleb, digital marketing guru.
What's going on? How are you? Jared, yeah.
Stephanie, our HR.
How are you?
Ryan.
How you doing? How you doing?
Nice to meet you.
Hey, how are
We
you?
have our
Dude, that looks awesome up there, man.
regional
This
manager.
looks better in his place than it looks at our place.
No, it doesn't.
No, but it makes me like it seeing it. See what I'm saying?
Well, I have really short walls.
No, but it looks awesome, dude.
No. This is our HR, I'm sorry, our recruiting director, our regional managers.
How you? Good to meet you. Good to meet you.
Hi, Kim.
Hey, how
Nice to
you
meet you.
And this is my office here. Got all my
Awesome, man.
my memorabilia here from
Dude,
Grant's
that's
events.
awesome,
Look
bro.
at that. Does that look familiar?
Dude, look at this, huh?
Wow. Gold plated.
I forgot about him, man. He looks good right
He gave it to my
there.
little boy, so I kind of hold it for him, and so he's ready for it.
Wow.
Yeah.
Very cool.
Dude, this is awesome, man.
Thank you for visiting.
You coming tonight?
Yeah. In fact, I'm gonna try. I'm picking the whole company. 11 tonight, 11 tomorrow.
Wow.
So we're going field level. So we're
Oh, look at this photo right here.
Look at that.
Look at that, man. Got some Cardone Capital, man. Look at that, man.
I'm a fan, man. I've always
Dude,
have
that's
been.
awesome. Bro, this deal, these 4 deals I'm doing right now.
Yeah.
Insane.
I'll bet you there's one other group. We'll make money.
We actually met
One of
briefly
the
at the 10 extra O'Connell. Seems like, but
Insane.
Are you only going to do the one office you guys did there? Any other offices? Huh? Are you going to do any other offices, or just the one that you want to restore?
Yeah.
Unless something comes up.
Well, there's a deal here. Sam didn't like it, and I wanted to move there and put it like our headquarters. But he just didn't like it or whatever his metrics are. I still get the numbers on
Where
it
is
since you guys. Shepherd and 59.
Oh, wow.
It's a big bank building built in 08.
Yeah, send it to me.
I won't.
Okay, hey, you guys.
Thank
See
you.
you guys at the game tonight, all right?
See you there.
Okay. Who y'all pulling for?
Oh, who are you pulling for?
No, who y'all pulling for?
Where were the Astros?
I would hope so. Nice meeting you guys.
Okay, so tomorrow we'll figure it out.
Let's get a photo real quick.
Okay, guys.
Appreciate you guys coming
Okay,
through.
you guys be great, all right?
Awesome, man.
Thank you, guys.